Welcome to the Probate Nation. My name is Richard Ruddy. People are living longer thanks to good health care and healthy lifestyles. But as we age, not everyone remains as sharp as they were earlier in their life. And frequently, a loved one, a son or a daughter, is called upon as a court-appointed conservator to handle the finances for an elderly parent. As a court-appointed conservator, your administration of these finances is overseen and audited by a local commissioner of accounts. And each year you need to file an accounting with the commissioner detailing all the money received and spent during a 12-month period. The form used to report your annual account appears to be a simple one-page form, but appearances are deceiving. Our show tonight will get into the details of what you need to report, as well as how and where it is reported on the account you will be filing with the commissioner, so that you can continue the living probate train ride for your loved one. With us tonight is a professional who helps conservators prepare and file the account. He will guide us through each line on the account form, so all you new appointed appointed conservators, get out your pencils to take notes as we have a hands-on work session on preparing the conservator account. Our guest is a co-founder of Grinnings & Low LLC, a Fairfax City accounting firm founded in 2016. This firm specializes in Virginia inventory and accounting filings submitted to the local commissioner of accounts for Virginia estates and conservatorships. He's a graduate of the George Mason University with a degree in accounting. And prior to forming Grinnings & Low, he worked as an auditor for the Fairfax County Commissioner of Accounts for 2 years. Please welcome Tim Grinnings.
Thanks for having me, Richard. It's
Hey,
a pleasure.
Tim, thanks for coming over. I enjoyed talking with your partner the other day.
Yeah.
That was a lot of fun. And looking forward to getting into talking about the accounting.
Absolutely.
That's
the meat and potatoes.
That's where the rubber meets the road, doesn't it?
Definitely.
So we're going to show on screen just very quickly this one-page form, which I've numbered so that people can see it. You'll see it on the screen. But the beginning of the account, the top part of the account form, actually has a bunch of details very similar to what you would be reporting and recording on the inventory form. You got your court file, the court that you're actually authorized to be a conservator from, the estate name of the incapacitated person, their address, and then we get your name and address and so on. So one of the key things I want to point out though is in number 10, okay, which is here's where you're going to report that 12-month period that's going to frame the information reported on lines 1 through 10. Okay, so if you got qualified on March 2nd, then your accounting is going to run from March 2nd through March 2nd of the following year. Okay, so just keep that in mind. Okay, and that'll help you understand what to report down below. So let's begin, Tim, and talk about this very simple one-page, 12 little number form that we have here. Okay. So first one is line 1, the beginning assets. So on this line, what am I putting there?
Right, so the beginning assets, there's 2 separate things that you could put there. If you're doing a first accounting, it's going to be the sum of lines 1, 2, and 5 from your approved inventory that you've already gotten approved with the commissioner.
Okay.
If you're doing a second or a subsequent accounting, that line 1 is going to be the assets on hand from the prior accounting. It's going to just carry it on up to that line 1.
Okay. So we basically are carrying forward some number either from the inventory or the prior accounting. Mm-hmm. So that's a pretty easy number to put down.
Yep, and it's got to match or else.
So you do, and that's one thing you do want to make sure you take a look at. So what is that number on the inventory, and make sure you carry it over correctly. Mm-hmm. And same thing with the accounting, if it's from a prior accounting. So is there any supporting documentation that we need to provide for that particular number?
Actually, for line 1, you don't need to submit supporting documentation because the commissioner's already verified that value on the inventory form, or if it's a second and subsequent accounting, they've already verified that line 9 assets on hand from the prior accounting. So you don't need to submit anything to verify those assets.
And let's just stop for a second and talk about the fact that throughout the accounting reporting process, substantiation and support for what you've done is critical. Okay, so
yes.
We're going to talk about this, where you got your money from, what you received, how you spent it. We all have to document that. Unlike when we filed the inventory, we didn't have to have anything to support that. Now we have to prove it, okay? And that's with some appropriate supporting documentation.
Absolutely.
So to begin with, in line 1, Commissioner's already got that information on hand, so he
Yes,
doesn't
sir.
he doesn't need anything to back it up. But line 2, we started to get into receipts. Okay, so what is report on line 2?
So receipts is another term for our income that we're receiving. Just think of it as receiving. You're receiving money coming in. So that's going to be any bank interest, any dividends coming in, any retirement payments that happen to be deposited into the conservatorship accounts, any refunds that you happen to get. All of that would be reported on line 2 as receipts.
Okay, and so the receipts, though, is not necessarily income like for tax purposes.
No, absolutely.
So we just
not.
make sure people don't think that
Yeah.
they would take this information and report on the tax return.
Correct.
Should the executor compile a separate sheet and sort of itemize each of those receipts by bank account, so that and then compile that into a total?
Yeah, absolutely. So as an additional requirement to preparing this 1682 form, the conservator has to create an itemized schedule of all the transactions that have occurred within the conservatorship account. So every single interest payment, every single dividend received, and then also any disbursements, gains, losses, which we'll talk about later.
Okay.
All of that has to be listed separately, and then you'll attach that to this 1682 form.
So if I have a money market account at a local bank and I have statements from the last 12 months and I earn interest each month, I should have a schedule that shows interest for each one of those months that then totals up to the total I earned from that particular money market account?
Absolutely. Every single deposit that you get from interest in that account, you will list, the date and the amount, and that'll be.
Okay, so that's important for people to understand that it's just, and we just can't just take the bank statements and just throw them in a pile and throw them. We have to really actually put them on a list so you can then track them as an auditor.
Absolutely.
Okay, so that's important to know. Now, what type of documentation do I need to actually include copies of those bank statements in to show each of those interest payments?
Absolutely, yeah. You want to submit a complete set, all 12 months of every bank, any bank accounts that you have. You want to submit all 12 months of those statements, any brokerage accounts that you have, all 12 months.
And it's important to understand that, of course, as we talked about at the beginning of the show, on the top of that form, we have a 12-month period that may not be the first of the month to the last of another month. It might be in the middle of month to the middle of month. So you may actually have to include 13 months of statements because you may cross over some periods.
Yeah, it's okay to have overlap. It's certainly better to over-document than under-document.
Sure. And what if there's no activity in a bank account? Do we still want to include that?
Absolutely, yeah. The auditors are going to want to see a complete set
From beginning to the end, the entire 12-month
They want a
period.
complete picture, and you as a conservator, you're not hiding anything. Give them the whole set.
Okay. So but apart from interest, we could have other receipts, could be additionally discovered income,
Right.
Or assets, I should say, additionally discovered assets, or it could be refunds that come in, which is not income, but it's a receipt. So that
Right. Yeah. I mean, the additionally discovered assets, I think, is typically put on line 4 as an adjustment.
Okay.
But yeah, the receipts are going to be, all of the retirement payments that you're receiving into that conservatorship account, interest, dividends, and the like.
Okay. All right. So let's continue on with. Let's go to line 3. Okay. So line 3 is gains on assets. So, tell me what goes on line 3? We say gains, but what does that mean?
Right. So a gain, you're only going to have a gain potentially if you sell an asset. And that gain calculation is based on the inventory value that you placed on that asset. So if you've got a car and you put an inventory value of $5,000 on it, and you go to sell it and you're able to sell it for $6,000. Well, the difference there is that $1,000, and that's what you're going to put on line 3 as a gain.
Okay. And again, just because it reflects a gain from an accounting perspective, it doesn't mean it's a gain for tax purposes.
Right, yeah.
So we want to make sure we get that
Our
correct.
basis is the inventory value here,
Correct.
which tax reporting is a completely different basis.
Okay. So we talked about the tax we got to do. That doesn't necessarily mean it's going to be on the tax return. And so a sale of a car, the brokerage account could be selling stocks and bonds.
Oh,
And so
absolutely.
that whole list that you got from the brokerage house that started your book entry in the inventory is critical in beginning to, because Because the thing that would be interesting there is that you might show, from a tax standpoint, they would produce a statement at the brokerage house that says you have $2 of gain,
Right.
but you might actually only have $1 of gain from an accounting standpoint.
Yeah, absolutely, because the basis is different.
Correct.
It's a different calculation that's
So I
being
think people
performed.
need to be careful about that.
Yes.
And then what type of documentation do you want to see typically for gains like that?
Yeah, so if you're selling stock, just a copy of the brokerage statement that details the sale of that stock. And if you're selling a car, bill of sale along with the corresponding bank statement showing the deposit of the sales proceeds. And if you're selling something big like a house, you'll have a HUD-1 document. You want to submit a copy of that, and that's just a document that gets filled out as you complete the sale of a home.
Okay. All right, so we started talking about adjustment. So line 4 seems to be kind of a general area catch-all. We're trying to fix stuff that need to be fixed.
Right.
So what goes on line 4?
So line 4, there's 2 instances where it's appropriate to record something on line 4. That's if you made an error on the inventory or if there are newly discovered assets.
Okay.
So if any of those situations are present, then it's acceptable to make an adjustment on line 4. And a fun fact is that line 4 is the only line on this accounting document that can have a negative value. So you can make a negative adjustment.
Okay. Now, if I have newly discovered assets, what do I book it in at from a standpoint as far as the...
Right. So it's going to be the date of qualification value.
Okay. So even though I didn't know about it, I'll still go back and get the date of qualification value.
Absolutely.
Got it. That's important to know. Okay. And do we need to have any, at this point now, do we need any proof to support what we're doing on the line adjustment here?
Yeah, definitely. So if you discover a checking account you didn't know the incapacitated person had, but it should be in the conservatorship, what you'll do is you'll submit the bank statement as of the date of qualification for that account, and that serves as evidence of the value of that asset.
Okay. All right, so then line 5 is we add lines 1 to 4 and you get a number.
That's the easiest one.
And then, of course, what we'll talk about later is that line 5 has to equal line 10. So we'll stop here. Just anything that is where people normally most likely trip up in lines 1 through 4 that you want to point out.
Yeah, I think a lot of times people trip up on calculating the gains. They'll try to use the cost basis from a brokerage statement to calculate the gain. And the brokerage statement is going to give you a gain that, as you said, is a taxable gain. It's not the same as calculating the gain based on that inventory value. So that's the biggest hangup that I see. A lot of times people also try to put in adjustments incorrectly, if they can't get it to balance, or they'll try to push the market value fluctuations in on line 4 as an adjustment, and that's just wrong, and that'll just end up making things out of balance.
Okay, so we don't want to be out of balance.
No, sir.
That's not a good thing. Well, let's go to the bottom side of the form, which go to line 6.
Okay.
So what goes on line 6? These are disbursements for debts and expenses.
Right. So line 6, disbursements, you want to think of it as all of your expenses that you've paid for on behalf of the incapacitated person. So, every check that you've written, every payment that's been made out of these conservatorship accounts, that's going to be, the sum of those figures is going to be on line 6.
Okay, so if I have multiple bank accounts, I would add up the expenses out of account 1 and add that as a total, and add up account 2 expenses and so on. Itemize them, and then
Absolutely.
But we list everyone, whether it's by check or if it's a debit or ACH transaction. We sort of pick that up as well. And again, do we need to include all these statements then that show all these charges against each of the banks?
Oh, absolutely.
So, and we
that's
want the
required.
full statement for the whole period, even if there's nothing charged against the account for a month.
Right. You're not trying to hide anything as a conservator, and the auditor wants to see a complete set.
Okay. Do we need to state the purpose behind each disbursement?
Yeah, it's always good to state the purpose because this is a document that's going to be reviewed by an auditor who doesn't know what that expense was for. So if they see a check that's written for something, they want to know why it was written. And that's just an additional layer of just verification that the funds are being expended on behalf of the incapacitated person.
Well, let's talk about checks, because one of the things is you want the conservator to include a copy of those checks that have been paid.
Yes.
Okay, so that's a lot of times that's a problem for people.
Absolutely.
Because a lot of times, not all banks will give you a sheet that has all the checks paid on. You actually have to ask for that when you set the account up.
And pay for it.
And pay for it. So that's something that they want to be aware of when they open up that checking account for the conservatorship, to make sure that they can get copies of the paid checks with their statements.
Absolutely, yeah. When you're setting up the conservatorship account, you want to make sure that it's a bank that does business in Virginia, and you want to make sure that as a normal course of business for that bank, they include the check images for all the checks that you write out of there, because you don't want to have to go back and request that and then pay extra money for that. It's just a hassle, and it's nice to have it all together all at once, so you can just submit it all at once.
Well, I have online banking. Why can't I just go online and just print off that check that shows up on the bank account on the online transaction? Does that work?
As long as it's an image of the canceled check, that's all that you need.
Okay. Yeah, it's not like days of old when they used to actually return to you the actual physical check.
Right.
You used to get a big stack of those.
Yeah.
Sure. Well, we want to be careful about when we get set up. Now, what about bill pay checks? A lot of times people will do bill pay and have that, so they never actually have a physical check.
Yeah, that's fine for certain recurring payments, utility bills. The auditors, the commissioners understanding that, you don't need to write a check for every gas bill every month. If you're able to set up just typical monthly payments, that's fine.
Okay. Okay, so we're tell me what type of proof of payment is not acceptable to support a disbursement.
Right, so a lot of times people will submit an invoice, but it doesn't show payment. It's an unpaid invoice. It's just a bill, which doesn't confirm that payment was ever made, or if payment was made, where the funds came from. So that's one instance. Another one would be a uncanceled check, or a copy of an uncanceled check, which is just, you wrote a check, you made a copy of it, and then we don't know what you did with it. So that's not acceptable.
That happened?
Oh, yeah.
Oh, my goodness
Definitely.
gracious.
And another one would be the carbon copies of the checks. Because, okay, so you wrote the check, you got the carbon copy, but we don't know what happened with that check.
Gotcha.
So those are examples of what wouldn't be acceptable.
Of course. We had gains on asset sales, so I have the same idea we could have losses on sales.
Right.
And that would get picked up on line 7?
Yes, sir. So line 7 is going to be your losses. And again, same as the gains, you're only going to have a loss if you sell an asset and the sales proceeds are less than the inventory value of that asset. So again, with the car, if you listed it at $5,000, you sold it for $4,000, that's a $1,000 loss on this form.
Okay. Now, line 8 talks about distributions to beneficiaries, but I think this is really only comes into play when we're actually wrapping up the conservatorship,
right?
After that person has died.
Yeah. So you're only going to have distributions in 3 instances: if the incapacitated person passes away, if they regain their capacity, or if the conservator resigns and the new conservator has to be appointed.
Okay. So there's 3 different cases. I got
Right.
you. Okay. Last thing I have on this list is line 9, which is assets on hand at carrying values, which is basically what we recorded as the value at the date of qualification,
right,
or whenever we acquired the asset. So, so again, talk a little bit about that carrying value again to distinguish that from cost basis for tax purposes.
Right. So the carrying value, the beginning basis of that carrying value, is the inventory value of that asset. And that, if you add any assets to that, then the carrying value goes up. If you sell any of those assets, the carrying value goes down. So if you have a stock and you get dividends, the carrying value goes up. If you sell portions of that stock, the carrying value goes down. It's just simple addition and subtraction. But it's different than what's going to be reported on the brokerage statement for tax reporting.
And I think, again, I keep coming back to that. That becomes a challenge for a lot of
Absolutely.
people who don't, who are preparing this. I see that on line 10, below line 10 on this form, which we've identified as number 12 and 13, that there's on line 13, we have the cost basis, but then down below here in this, we also ask us to report what is the market value. So even though I might have an asset that I bought for $2, I continue to carry it at $2,
Right.
but it might be worth $4.
Right.
So now I have a separate column where I'm calculating all the fair market value of those assets. Why do I need that?
So the fair market value is important for three things. Firstly, it's important for your bonding. Secondly, it's important for, it's the Commissioner of Accounts fee is based off of that fair market value. And thirdly, the fair market value determines the...
Conservator fee?
Yes, the conservator fee. That's right.
I was thinking that I knew that was important for the
That was the last
conservator.
point. That's good.
Sure. So we do need to keep that track. So
Absolutely,
if it
yeah.
turns out that assets have gone down substantially in value, then the cost of our bond goes down.
Right.
And the cost of the commissioner's fees goes down. And of course, what you would earn as a conservator for doing this work would go down because you're
Absolutely.
managing less assets.
And it's easy to find because you can just pull that figure right from the brokerage statement for these marketable securities.
So again, for that purpose, then when we go to do, we do want to provide the supporting documentation to show
Definitely.
the carrying value of the asset in line 10
Mm-hmm.
and line 9. And then when we go down, we have a separate set of statements that shows the fair market value of those assets if it happens to be different than the carrying value.
Mm-hmm.
We don't have just cash.
Right.
We have an asset that might have gone up. We need to get that documentation to support that too. Is that right?
Definitely.
Okay. Well, there's we get to the line 10, and line 10 is supposed to total up, and line 10 is supposed to equal line 5.
Yep.
And if it doesn't, we're in trouble.
Definitely.
Okay, so there's something wrong. Okay,
Yep.
so we have to
You're
go
out
back.
of balance. There's an error
Got to
somewhere.
go figure it out someplace.
Yep.
So, we got a lot of stuff covered. Before I get to your sort of final comments, as we look at the bottom half of this form, okay, which is basically disbursements and establishing carrying value for assets on hand, where is the place where people get tripped up the most?
Calculating the carrying value of the assets on hand, absolutely. Because if you have stock accounts, there's a lot of fluctuation with, if you're selling fractional shares, if you're getting fractional shares as dividends, that the value of that stock, the carrying value is moving up and down, and it's difficult to track what the actual carrying value is. And if you're not doing it right, the whole accounting is going to be out of balance. So
Okay.
that's what throws most people off.
Okay. Well, we've covered a lot of ground. I'm going to give you a chance to, kind of summarize maybe a couple of points you really want to stress for folks about preparing the accounting form for a conservator. So what are your final thoughts you want to share with our viewers?
Well, I think the best advice that I can give is to stay organized and work on this monthly. Because when you get to the end of the 12-month period and you're trying to remember why you wrote this check, or you realize that there are hundreds of transactions that you have to record, it's insurmountable to try to tackle on your own. So if you break it down monthly basis, and then you make sure that all of the supporting documentation is included in there as well, then you're going to be ready to go when it's time to consolidate this into one form here on the 1682.
I think that's good advice. Boy, I tell you, it's been a great show, great information. I want to thank you for taking the time. This is a great
No
public
problem.
service to the folks of Northern Virginia. So
All
thanks
right.
again for coming in.
Yeah, thanks. I appreciate it, Richard.
You're very welcome. Being a conservator is an awesome responsibility. I want to thank you for your commitment to serve in this role. However, with that responsibility comes a host of ongoing obligations, one of which is to properly complete and timely file an annual account with the local Commissioner of Accounts. The show this evening should help you properly complete that annual account, and when you have done so, please be sure it is timely filed. Sounds straightforward, but I would be remiss if I did not add these words of caution about what not to do. Do not ignore this annual account filing obligation and deadline. Do not ignore notices from the commissioner that you need to file an account. Do not ignore notices from the commissioner that the account you file is not acceptable. Ignoring these notices will cause a host of problems and could jeopardize your right to continue to serve. If you have questions or you feel overwhelmed with the preparation of an account, or if you need to respond to a notice from the commissioner regarding the account you filed or not filed, we strongly recommend that you consult with an attorney or accounting professional experienced with this conservative filing. They can help, and the commissioner will appreciate that you got advice to sort out whatever the issue may be. And on you go, driving the probate train for your loved one. This brings us to the conclusion of our show tonight. We hope you found it helpful. Replays of the show and all shows broadcast to date, along with other helpful information, can be viewed on the Probate Nation website. On behalf of the Probate Nation, thank you for visiting with us.